Alright, Blue Ball Forex is here and welcome to the Inside Empire. Today I'm actually excited to share to you a strategy that I used to make over $9,000 in a single day trade. Alright, so guys, I'm gonna be able to document this trade because this is actually one of the best trades I've taken this year. And I'm gonna be showing you the strategy that I used to trade. As you can see, I was trading on a gold market. The trade is still running, so currently 90.60. Guys, as you can see, this is a live account. I've been able to make some significant withdrawals from the same account, and this is, guys, a live trading account. All right, so I'm going to be guiding you on a step-to-step on how I was able to take that particular trade and how I have been actually trading this particular account. All right, so guys, let's get into it. All right, so basically, beginners think that the market should move in a continuous path. All right, but this is basically not how the market moves. So market moves creating a series of pullbacks that we call basically retracement, and this is what I'm gonna address right now and show you how I was able to take that trade just based on this one simple strategy. All right, so I want you to pay attention, so I guide you guys on how I took that trade. The first thing, the market, we have basically three kinds of a market. A market is on either in a bullish trend, a bearish trend, on a consolidation. All right, so those are basically the three market trends we have. The market cannot be doing anything else apart from either going up, going down, or ranging. All right, that is the basic forex market structure. Now, in an example where the market is going up, all right, it goes up, then it retraces, goes up, then it retraces again. Now, this particular market is what we call a bullish market. All right, and now this is what I want you to pay attention. All right, so a market which is on a bullish forms a series of higher highs and lower highs. Higher highs and lower highs. Please pay attention to this. All right, higher highs and lower highs. All right, pay attention to this, guys. Very important concept. Lower highs. Now, in the case the market is tired of doing this, or now it has changed its trend, it will form a higher high, all right, and then it retrace below this particular pullback, which was basically the initial lower high. All right, so at this particular point now, we call this one a market structure shift. All right, we call this one a market structure shift. We call that one a market structure shift. And once we have a market structure shift, the market will retrace to something called internal range liquidity. Basically, internal range liquidity is comprised of three things. Internal range liquidity is comprised of either order block, fair value gap, or a liquidity void. In the case you don't know what these are, you can be able to watch my previous videos. I've explained what is an order block, what is a fair value gap, and what is a liquidity void, because these three institutional reference points, they are basically what forms the ICT internal range liquidity. So at this particular point, so many people do a mistake of entering for a sell at this particular point just because the market has broken the structure to the downside. So they conclude now they should fix sells from here. So that is how they go for short position, and they put their stop loss on the previous high and target some low of 1:1 or 1:1.5. But this is a pathetic, venomous, malignant, repugnant, useless trade, because there is no way you can be having a 1:1 risk to reward ratio. So this one, as far as I'm concerned, this is not anything that you would like to do. All right, now getting to this, what do you do now so that you can be able to take a trade that has a good risk to reward ratio? Number one, you need to wait for this market to have a pullback to an internal range liquidity. All right, please pay attention to this. A pullback to an internal range liquidity, and at this particular zone you will be finding either of the three institutional reference points that I mentioned within this particular zone. So the first one will be an order block at that particular point, or a fair value gap, or anything. But for me, because I know the basic business principle is to sell at the extreme high and to buy at the extreme low, so I want to order with the order block which is at the extreme high so that I can be able to capitalize on my trades. All right, so that is where you want to see your market retrace to, and then from the internal range liquidity, which is the order block per se, you expect the market to move to the downside. And once the market moves to the downside, you are supposed now to be in this particular trade for a sell. All right, so once it comes there, again, you can see where you are putting your stop loss is somewhere just above the institutional reference point. And even if you target the previous low, you can still see that you are making a risk to reward ratio of about 1:4. Pretty good trade. So this means if you are risking $100 probably in your stop loss, if the market goes your direction, you have a possibility of securing $400. Or if you are risking $1,000, probably you might be making $4,000 in the case the market goes to your direction. All right, so this is one of the most powerful approaches. Now I want to show you guys the same approach here, because that is what I used to take this trade. It's currently running still in my MetaTrader 5. I'll be able to show you in my phone. So what did we see here? I want you to pay attention now. Assuming this trade is not here, all right, assuming that trade is not there, we have a market structure shift here. All right, you can see the market was forming a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. But here you can see we have basically broken this structure to the downside. All right, so here we have a basic market structure shift. We have traded below this particular swing point, all right, at that particular point. And having a market structure shift, we have a market structure shift at this particular swing point because the market has traded below this particular swing low here. So this is where we captured our market structure shift, MSS. All right, this is where we had our market structure shift. It's also called the change of character. And once we saw a market structure shift, we waited patiently for the market to retrace to an internal range liquidity. So we patiently waited for this market to retrace to an internal range liquidity. And this case, our order block of interest, because I said mostly I enter from the order blocks because it is the one probably which is at the extreme points. So this is where the order block is, the last blue candle to print before we had the aggressive sell to the downside, which resulted to impulse which broke the previous swing point. So that is basically where we had our market structure shift. And once we had a market structure shift, the market retraced to this particular order block. And from the order block now, we were able to secure our trade, which was actually a very low risky trade. All right, a short position there. Amazing trade. Our stop loss just above that particular order block. And we are targeting all the way to this particular previous low. All right, so you can see if it has to go all the way, but I'm going to close some trades because already it's performing very well. But if it has to come all the way down, it means that I will be securing around 1:6 risk to reward ratio. But basically I'm anticipating even for 1:5, which is pretty fine. I've already covered that, and that is why I'm closing. So guys, for this kind of strategies, attached below is a link to my Telegram and also to my Instagram. Follow me in all my social media platform. And also, if you want to trade with the broker that I trade with, is Scope Markets. The link is also attached in my bio. Click that link, create a trading account, and then join our community, which is on Telegram, so that you can be able to guide this particular trading insight. This is Blue Bull Forex, and until next time, again, goodbye from the side of the Insight Empire.